Just give me a minute to confirm the feed on the. Okay, I think we are live now, Himanshu. Let me just
Okay,
check.
let me just check as well.
Okay, perfect. Hey, Himanshu, how are you doing, man?
Doing great. Uh,
So, so just to let you know that it is 2 p.m. for me in the night. Okay,
okay.
so I just want to sure that I get the discussion right. So, we have been following each other for a long time. We have connected before. Okay, we have entirely different investing style,
Right.
and yet share a lot of mutual respect. Like, how do we do it? So let me start it very like clear. Like, you have been very focused on the bear thesis on several stocks, and I understand that's a lot of pain that came in the market, especially for you.
Yeah.
And in the so what do you think, what is happening here? Are we um, is it a bull market, or is it a bull trap that we are facing right now?
Right now, basically, it was a melt up. It means like your hedge funds and retails chasing beta in risk assets because few data points we saw like inflation going down in November print, then December, then in January. January was like on par. That's why I think they started chasing this thing. And historically, after mid-year, if midterm election year is bad, then from the next year they start rallying a little bit. But at this point, they aggressively bought every stock. I think it's more of a technical bid rather than a fundamental bid because we saw Q1 earnings, and I think almost every big company failed to achieve the estimates. You can name it like Apple, Google, Microsoft, Facebook. And in terms of revenue, they achieved the estimates or little bit come closer, but in net income, if you compare YOY, it declined a lot. But in few stocks, their share price also declined a lot. But companies like Microsoft and Apple, their net income went down by 13%, and they're still trading at much premium, like 26p for Microsoft these days. And like in like Amazon, when we saw it, its net income went negative for the year, like 27 cents and negative for 10.2 billion shares. The Google, its net income declined 34%. Meta, it declined by 52%. So these are the things suggest like it just a melt up and not people, mostly hedge fund chasing it, and retail follows the FOMO. And it's zero DT call option also really volume also went up a bit. So that also thing.
So let's take the case. Like, I was very surprised on some of the stocks. I have been believer at least that outside indexes, okay, the especially the growth track has been severely decimated. That was my
Right.
view. Okay, I kept it, but I believe that the indexes haven't declined enough yet. Okay, everything we had in
Yeah.
terms of like narrative about inflation, about rising interest rates. Okay, I work in digital and data. I know like how some of the big tech players that we have, how inefficient they are. They
Right.
were overpopulated, so it is good to see that at least some of the fat is being trimmed. Okay,
Right.
and I know it's sad that people lose job, but these companies have gone to a point where they were highly inefficient in a lot of these places. So first, like Facebook came, and I think Facebook was decimated up to an extent where it was literally pushed out of big tech, like the same category. Okay, big tech is here, but Facebook was slightly been outside.
It
Now
was below
face
COVID-19 lows, basically
Yeah.
$88.
So Facebook came back, and one of the thing, I think, I don't know how many people know this. Like when I was watching like the first season of Indian Shark Tank, I was surprised like how many of these young businesses, small businesses, are dependent over the sales from Instagram. Okay,
Right.
so there is a definitely I was seeing that people are spending money. So people will ask, okay, how you're acquiring, what's your CAC look like, what's your what's the mode of your customer acquisition, and a lot of these people are actually coming back to Instagram. So there is
Right.
definitely, especially like markets like India, there is a lot of SMB is in spending that comes to Facebook, but Facebook then came back and they said like, so they said within like 2 quarters they said, okay, this is the cost saving, which is telling how much money they have actually wasted over the last 4 or 5 years when they were not efficient. And then they came back and say, okay, 40 billion we are going to buy. So it was definitely like, from any standard we look, it was pretty aggressive and pretty impressive. Okay, so now with the narrative, the way it bounced back, I mean, this bounce in, what do you think? Is this bounce is because of the change in narrative, or it's going to continue, or again like it's going to hold because market sentiment overall is still going to be negative? I mean, at least we don't know that part, that we have seen the bottom. So how would you know that, or what are your markers that you will see? Okay, if I see certain signs, I will see, okay, the bottom is behind us. If I be certain signs, you will say, okay, this is a bear rally, and we will see the decline again.
So, in terms of Facebook, I think Facebook bottomed. Because compared to other big tech, it went down dramatically and drastically a lot. The same happened to Netflix as well. They like basically crashed it. Even I didn't thought Facebook will go down below one like COVID-19 levels, but it still did, and it bounced back because like even Carvana bounced back 400%. So why not Facebook? But I still think it will go down little bit 20-30%, but I don't think it will hit 88 again. And I'm believer of Facebook, so I also bought it because its P actually went down to like 9 or 10 when it hit 88. And in terms of other stocks, just look at it, semiconductors, which rallied so hard. Their indexes like SOXS, which even crossed the August rally, and with declining earnings and guidance. Like AMD was saying they will be growing 60% or plus in 2022, but when actual number came for the yearly, they grew by 44%. And their guidance is not that great either. Means I checked Lam Research, AMD, Qualcomm, almost every semiconductor company meets the basically their guidance in revenue for the upcoming year or quarter. But they still rallied so hard. So I think it just the faster the way it going up, the fall will be in the same fashion sometime in future. And even there is a reason like net liquidity also rose up a lot. Like it was around on SPX scale, it was around 3,400 back in October, but in recently, I mean, just 3 to 4 sessions back, it was around 3,993, basically
Hmm.
3,930. But now it declined within last 2 sessions. It declined to 3,690, I guess, and dollar also raised by like $2. DXY came up to 103. So I still think it's a melt up, chasing a beta and bear rally kind of thing.
What is the situation on ground around you? I mean, you are in US. I mean, one thing is that everybody's saying on CNBC economy is doing good or bad, but what you are seeing, like within your friends, within your community, when you are going to Walmart and other places, I mean, you seeing economy in a worse shape or a better shape? I mean, people are worried about the grocery bills and things like that. So what's what you are seeing on the ground?
Like if I go to Walmart or Costco, I can say there is no recession. But if I go to like Target or some fancy places, then I think yeah, the crowd is a little bit lesser here. And like I live in Phoenix, so Phoenix is basically semiconductor valley. I'm seeing a lot of my friends from Intel also like laid off in last 2 weeks, and like they are reducing their workforce by 20%. But and even in Bay Area, a lot of friends are getting affected in Amazon or Microsoft. Uh, Even Meta, they did a lot of firing, and that firing was also a little brutal. This kind means very less amount of empathy and compassion shown in those
No,
firing.
it. I'll tell you two stories. I mean, after that.
So yeah, means on the ground, if you check with the friends, and because our friends basically work in tech industry, and like so that's why it's layoff is much worrying thing.
Makes sense. I mean, like, so, I mean, like, I know there's a lot of discussion about layoffs and the lack of empathy, which I really hate because I have seen the dot com. Dot com was even worse when it comes for empathy.
Yep.
And I was in oil and gas industry between 2014 and 2020. So, I mean,
Right.
forget empathy the way. But you know, two things which I realized, like when the layoffs are done in this fashion, okay, a lot of time it also indicates the strategic shift because they are simply saying we are letting you people go and we don't expect you will be back with us.
Right.
Okay, and suddenly what happened, like especially in the case of Google, I felt that the way it was done overnight. I mean, you cannot expect company who is so woke as Google to do something like that.
Right.
Okay, it was like that the whole AI saga that has been kicked in. I mean, whether OpenAI and Microsoft will make a real dent. Nobody knows, but the perception they have created has really
Yeah.
created some unnecessary discomfort for Google for sure. And you know what is happening, and I'm surprised that a lot of people are just now started buying AI companies. So same thing like they just see, okay, this company is doing something in AI. It's a bit blind. I was surprised that in the middle of beer rally somebody is doing it. Okay.
Right.
And few days back, couple of friends said, "Oh, we bought stocks in AI company." I said, "Which?" He said, "There is a company called C3 AI." I said, "Why did you buy a stock in that?" Said, "It's an AI company." I mean, people
Yeah,
had
it
no
rallied
clue
more
about
than
it.
100%.
So I was surprised, and it has like gone from $10 to $26. I said, Nothing. This company has done nothing." So there is a bit of mania that is being created. So
Right.
keeping focus on that now. Now let us come to the stocks we generally like. I mean, like for example, have a big position in Palantir. I mean, there is a lot of other stocks in this category which already declined like 90%. Okay, so
Yeah,
what do you think
their
about?
sell-off was brutal, and I don't think they should have gone this far, at least in some of the tech companies. So that's why they rose like 50, 60% in last 3 months. Even Palantir was $5.9. Then it
Yeah, man. I mean,
went
I
to
cannot
like,
believe.
yeah, then it went to what, $9.2. And they have that outstanding share also like more than 2 billion now.
Yeah,
That's the issue to like raise the stock price up. And even Snowflakes was 120, it went to like 178 last week. A lot of even Datadog was 65, it
but
went to 88 or something.
do you believe this they will be able to hold these gains in this time?
At least I think in some of the tech companies they won't see their like bottom again because
That part I agree that yeah, I mean
the
that
issue
the
was
bottom should be defended.
because in December, a lot of people got a margin call. A lot of people wanted to get a tax benefit, and that's why in last 2 weeks they sold off take stock a lot. Even QQQ hit 263 or something uh, in December, and again the same people or maybe different people they just buy it back starting in January from like January 6th. Even Tesla was 100. Means I have a lot of different opinion on Tesla, but the way they sold off Tesla, like I was short on Tesla from 313 in September, but it was still holding around 200, $230 till November and December. But from December 1 till end of the December, it directly slashed $100 per share. So means everybody knew, even bears knew that Tesla will rally hard because of short covering, but like it exactly went up like double. So that is also extreme because the sell-off was extreme, so buying will also extreme in a lot of cases.
Tesla is one stock now that always bounce back very hard from extreme
Yeah,
weakness. This is I have
yeah.
seen.
Tesla and Bitcoin, they always
Yeah.
basically gives pain to bears whenever they bounce back.
Yeah, and I was discussing about with friends, and I mean there are a couple of friends I know. I mean there's a very close friend. He's a CEO of an EV company in India now, and I was saying like there was a discussion around that the price cuts and all that. I said the price cuts. If you see that the price has been increased steadily over the last 1.5 year for Tesla, they need a
Yeah,
price cut because they want to fit themselves in the EV brackets that Biden government has strategically placed. And it's not about you have so much margin. Okay,
right,
the Tesla strategy is very simple. They do not want their money to be tied in supply chain. So they
right,
do not want the inventory on the shelf. Their idea is like it's better to revolve inventory at a lower margin faster rather
yeah,
than just keeping, because it's not about like how much margin you are making. It's also important, and people always forget that how much margin you are making in how much time.
right,
Okay, if you can get 5% 20 times, it's better to have 10% 5 times.
right.
And this is what generally people forget in terms of like operational science, because I don't know on Wall Street how many people actually understand operation science. So,
But
final
I can
verdict.
tell you one thing,
Yeah, please go
Sachin.
ahead.
Uh, basically, you know me, I don't much like Tesla, but I have to admit, like after seeing all Q1 earnings from mega cap tech, Tesla's earning was special. Uh, because when you see decline in net income in every other company, the way it is declining, Tesla's earning was good and their revenue grew by what 39%, I guess, on the year. So basically, Microsoft and Apple they grew like 2%, Amazon grew 7-8%, Google like deceleration, uh, the same thing. So in terms of all, Tesla's earning was really good.
And there was so much noise about Tesla, like people who are, so if you see like in terms of people buying EV are more on the left side. And there was a lot of narrative that has been created against Twitter and Elon Musk, and yet Tesla grew pretty
Right.
decent. Okay, and
Yep.
when I go back to all those beer theses, and people, I mean, I said that the beer thesis about Tesla was that Tesla will run out of cash, the Tesla
Right.
will never be able to scale. Okay, I said those things didn't happen. Today, the company is self-sufficient. Company has
Right.
zero debt. So, any beer thesis that is telling at this particular point that Tesla will go bust is not sincere. You can have
Right.
beer thesis about company, that is fine, but you need to have a sincere thesis about it. Okay,
Yeah,
if
means
you
only two things I see, which is a little bit declining margin because even economy is not doing great at this point, and a little bit on FCF side, which I saw like they had 1.4 billion FCF, but next quarter it probably less than 1 billion. So that is kind of few intelligent beer thesis, but overall, people, I mean, in terms of Tesla, people talks any shit on Twitter, like some irrelevant things as well. So
yeah.
we can't consider that into equation. But some intelligent people, they got their humbling fall, whatever they wanted in Tesla, they brought it down to 100. And then it will just like move around between these prices, I can think. And
So
depending
final
on future
verdict.
fundamentals.
So I mean, it's bull market a start or a bull trap? So you think it's a bear market rally and we are in a bull trap?
Yeah, I'm little pessimistic person, and I take more consider fundamentals. So looking at the earnings, I think it's a bear trap, no bull trap, sorry,
No
and
worries.
probably it might start declining a little bit. And it's also overbought. You can check any
No,
indexes,
I
the
agree. I mean,
SPY
it's
and
like
QQQ. QQQ was like 263, and within a month
yeah,
it's
five
like
weeks of
311.
continuous gains. No, so
Yes,
let me summarize. So I mean, the view is like it is a bull trap. However, some of the stocks For example, like Meta and some of the high growth stocks which are heavily decimated, they might have seen their bottom,
Yeah.
but broadly the market is likely in bull trap, and
Yep.
the rally that we see, at least it's very difficult to say that this rally can be sustained given the macro. And that part I
Right.
agree with you. I mean, at this point, and my view is very simple. When the market bounce, there is heavy activity in pre-market and after hours, and both of these times the market starts ticking up. Then
Right.
during the trading hours, market makes new highs, and you wait, because during the early bull market, actually people, the overbought conditions stay for very long. Every week
Right.
people say, and then what happens, that there is a strength around weekends, that market opens gap up after long weekends, and people just keep waiting. I'll find an entry point, and that entry point never happens. To me, that is the bottom I have seen at least few times in market. That's why a lot of people say that we missed the bottom in the GFC, or we missed the bottom in the dot com, because the
Right.
bounce was so sharp and so springboard type that people just cannot catch it. And I haven't seen that kind of strength yet.
Right.
So we also have covered, like, didn't realize, like, with that same thing, the tech stocks bottom and rally. But what are happening outside tech? Like, energy was pretty hot last year.
Right.
Okay, I mean, we
And they
expect
folded the
energy.
cane entire year.
Yeah, and being an energy insider, I mean, like, what we are seeing this year is that there's a lot of cash energy companies are having,
Right.
but there is a lot of uncertainty on long-term projects and long-term policies, especially in oil and gas. So my
Right.
view is that this year, and I've been in industry for 2 decades. I advise also some players at times. My view is that M&A is going to be quite big this year in
Yeah.
oil and gas and services in general, because everybody
Right.
is positioning strategy. So what is happening? Like, I just want to point five differences that why energy is different. I mean, especially the oil and gas part is. See, what was happening between 2010 and 2014, energy had high margins and the industry
Right.
was not capital discipline. But when the
Right.
industry went into 2014 to 2020 to decline, I mean, you just have to survive. So they've cut to bare bones. So industry become heavily efficient. That means
Right.
it can operate at a far lower cost margin at which it used to operate. Now suddenly, when it was operating at such a cost level which was far lower than it was, the gains became this with the all the oil price shock that came with it. Okay, so
Right.
that's the so producing or 100 dollar per barrel now versus producing $100 per barrel 10 years back is very different. The margins are much higher now. Okay,
Right.
the companies have less employees, the companies have less fat. Okay, the companies are more digitally equipped. Okay, so their turnaround of working capital is faster.
Right.
Okay, and since US has lost control over the oil price is pretty much, and of course Putin has shot his foot with the war, so there is only OPEC that pretty much control the oil price at this point.
Right.
Okay, and that's why they are keeping it strategically in the range which is exactly what they need to balance the budget. I mean, you cannot
Yeah.
blame them. If you allow them to control the price, they will control the price in the range they like. Okay, in my
Right.
opinion, oil price is still on the higher side. I mean, people come and say, "Oh, it has declined $40." I said, guys, what are you saying even? It was supposed to be 50,
Armaco
60.
production price is just 19 or $20 per barrel, right?
Yeah, it's. I mean, if you go to Middle East, it's even lower.
Okay.
Okay. I mean, if you come to Southeast Asia, so they are like, when you talk like about oil and gas prices, they're like, you can say like one price is operating price, which we call OPEX or lifting price. Okay. I mean, depending on where you are, it can go from anywhere from $12, in some places even $20. Okay.
Right.
And I'm talking offshore here. Okay. Some offshores may have even higher. But when you talk about development cost, we call about like UDC, unit development cost. Okay, that's pretty low at this point. And
Right.
the reason for that to being low is there is a reason for that is because companies are not sure that how big or how favorable the policies are going to be. So they are going for near term low capacity projects. So
Okay.
the risk taking is less. Okay, because normally what happens, like when you go for a project, it takes like 5 to 6 years, sometimes even 10 years to get it done before you actually see even the first barrel of oil. Okay, in today's environment, especially say for example, if you are sitting in US, companies are very apprehensive to invest money for a oil that is to be produced in 2028 and 29. People say, yeah, I mean, what's wrong? There is land, why companies are not doing. There is no, it's not Biden's mistake. It is Biden's mistake because if you want oil and you want investment, you have to provide a policy framework that
Right.
ensures, or at least that gives visibility what is going to happen over the right now. There is no visibility on that part, and I think that's the challenge that energy is. So, in nutshell, what will happen is, see, US is the only marginal player. It doesn't matter whatever you say about Suriname and Guyana and Venezuela. No country outside OPEC has capacity to add oil at such a faster rate and in such a volume that it dilutes the control of OPEC over the oil price. And that is, US is not utilizing it. So when I look this year, my view is that, I mean, energy should remain high. I mean, when I say high is $70 plus. And guys, I mean, I don't know how people look at it because they have seen 130, 140 at times. $70 is expensive oil. And if you have
Right.
oil at $70, it impacts inflation. I mean, you will reduce the inflation, but it will not go down to the level sometime you want it to be. So about energy, um, about like especially the oil and gas sector in general, I would expect it to be strong. Though in the late stage cycle of a bear market, you expect energy to weaken a lot, but due to the constraint that we ourselves have provided to the industry, I doubt energy will break down. If it breaks down, I would say that's good because it will
Right.
help a lot of other industries, but I don't see how. As long as the control is only in the hand of OPEC and US
Right.
is not willing to take this control back. What's your view on oil and gas?
Basically, I think even after 4.75% in FFR, oil means maintained to survive at 70 plus. It was 73 on last session. And basically, DXY rose from 101 to 103, and that's why oil and few commodities decline. But I think when FFR is this much and oil is still surviving, I think the industry is strong. Otherwise, it must have been below $50 if FFR is this much and there is not any constraint. But in last 2 months, natural gas declined a lot. It's like 52-week lows, and it's just around like 2.34.
Yeah. So, let me just, before I go, there's a question that is coming from our friend Chris. Chris is asking about Amazon. Okay, I know this is
Amazon,
going back to, and Amazon case is a bit curious. Okay,
right?
um, I mean, we saw the earnings, especially. What do you think of Amazon? Like, is about the crisis they are in as of today?
I, in this decline, I actually bought the Amazon and I sold the cover call as well. My break-even price would be $102. It should
Okay,
close below $102 so that my covered call should be in profitable. But
and what
the
price you bought Amazon?
I bought around $88, but continuously selling covered calls, I declined my average price a lot. But
Okay,
after seeing the earnings, I think Amazon will get sold off because for Q1 they did a guidance and they said like $0 to 4 billion in net income they can earn. But like companies saying that $4 billion worth of delta in their earnings, so I'm not sure what will happen because we don't usually see that much delta like directly $0 to 4 billion. And They said in the call that AWS Q1, Q2 would be not that great, uh, and they can't able to project beyond Q1 for AWS as well. Means AWS itself a big company, you can say that because it earns 80 billion in revenue and their operating margin, operating income is also really good, like 22 billion. But enter last year, what happened? Like in 2021, they showed some $11 billion in profit on their Rivian investment. So the same thing this year, they had to show $18 billion in losses on Rivian stake in their other income. So that's why the entire yearly income went in negative, like negative 27 cents per share, and they splitted the shares. So now they have 20.2 billion uh, shares outstanding. So to get that, like even they need to at least earn $30 billion, like $3 per share a year. Uh, and still, if it survives above 100, its P ratio would be still more than 30. And their AWS is growing by 20% for YOY last quarter, but yearly they grew, I think, 29%. But if they are slowing down, then their entire revenue growth will be slowed down. But they said like outside US, they're doing good in terms of their legacy business, and they're trying to maintain the efficiency as well. But I think Amazon can literally go down to and touch their 52-week lows. That's my view on Amazon.
I mean, I'm
But
also a
I
bit
will still
bearish
buy
on.
it.
I mean, I'm also a bit bearish on Amazon because my worry on Amazon. I mean, because if you see Amazon, the main growth behind Amazon is AWS, and people who are in market
Right,
and who are seeing the battle between the AWS and Microsoft Azure. Okay,
right,
Azure is capturing a lot of market. So let me make it very clear. Like AWS is the biggest in the market.
right.
Okay, Azure is the fastest in the market right now. The
Yeah,
way at pace they are
44% growth,
growing.
I guess.
So, and it is funny that neither of these companies actually have the best cloud. The best cloud belongs to Google. When you talk about reliability and I mean, there is no match. These companies do not have what Google has, but Google just don't know how to fuck sell it. I mean, it's so surprising. I mean, I remember like there was an article in 2008 I read, and which was saying that okay, I mean, yeah, AWS has started the cloud, but it is all Google who is going to control it. At that particular point, nobody expected that AWS will expand as faster. However, there are reasons why AWS expanded faster was Google was slow in the starting, and all these companies that we talk about like Netflix and Airbnb, these companies actually grow with AWS.
Right,
Okay, well, Google was not so fast in getting their product to the new age companies. Okay, so but as of today, while AWS is the biggest, but people who are using AWS now, you talk to them and they will tell you their pain. The number of, why the companies like Snow, why the companies like DigitalOcean, I mean, they are our data breaks. I mean, they are getting revenue
right.
because working directly on I mean, on AWS especially, and working on Microsoft is also pain. I mean, and I always say like the Microsoft is the world's biggest commoditizer. They don't give you premium products. They don't have a culture of premiumness. Their idea is that we will give you so many things at a price that you will hate it, but you will take it.
Right.
Like they have done in the case of Microsoft Teams. Sometimes they do
Yeah,
well as well.
Teams.
I mean, like, um I mean, if you see now, if they integrate Chat GPT quite well in that Microsoft Teams, that's really helpful. But anyone I know who use Microsoft Teams, I use Microsoft Teams. Okay, everyone hates it. Okay, whatever they say, yeah. I mean, you have SharePoints, but man, it's crappy. Okay, so the thing is the way they have packaged it, and that's the strength. And this is where one of the biggest lesson in strategy what people are also missing is And you know, as we were discussing yesterday, that in 80s, 90s, the idea was on the leverage buyout, and you outsource anything that is not core to your business. Okay,
Right.
then what happened that Wall starts preaching, oh, you need to look for profitability. You need to look for profitability. But you know, big tech plays a very different game. Their idea is like this: just go and burn the money to capture the market, and capture
Yeah.
the market at an extent and at a rate that literally no one can survive.
Microsoft is really good at that.
So that, and you know, this is how they defend their territory.
Right.
Okay, so everyone says that going for market capture, you burn a lot of money, but these people have a lot of money and they have a plan how to make money afterwards. So
Right.
market capture is one strategy that is working really well for them. I mean, like, and you know, funny that, like, for example, if you see Amazon, Amazon is struggling in some of their core areas, but if you see Amazon ad revenue,
Yeah, it's
actually
growing
is doing
fast.
far better. I mean, the way it is growing is far better than the Meta and the Google at this time.
Right.
So, you know, Chris has also asked, let me ask you this about, he wants to know about the snow. Like, okay, we all know that snow has bounced from almost from 120s to 170s, almost like went to, I was thinking like it's going to 180s. Um,
Yeah, it went. It was 178 something.
yeah. So, but I mean, I don't think it can hold at this level, at least in
Yeah,
this market. That's my views.
yeah. Means it whenever it makes a run, you can sell your covered calls. Again, go back. Again, you can buy the same quantities, or we can do some different strategies about it. The same thing. Most of the time, I do with snow.
No, I
But
agree. I
even
mean,
even in entire bear market, it sustained that 110, 120 bottom. And actually, people knows like snowflakes is something they actually want to own, even if it's for a higher price.
no, I agree on the covered calls. I mean, I'm keeping it this month. Probably my stocks will be called, but the only difference I'm going to make in my strategy is that until now, what I was doing, that I was selling covered calls. I was collecting the cash. And you remember, like we discussed now, that I opened an account which is strictly for options, and we were
Options, yeah,
discussing about it. Okay, and I made a lot of bad calls in that. Okay, but in 3 months, it is still up. I think around it's nearing around 20% gain. Okay,
nice,
and you know, I made a lot of mess up. My entry and exits were pretty bad. Okay, so you know, my the only difference I'm going to make now is that I'm going to use covered calls still aggressively. Okay,
right,
but earlier what I was doing, that I was buying 75% cash secured puts to increase the stock plus 25 out of the only difference I'm going to make is that now I'm going to increase the percentage of out of money calls a lot.
right,
50 to 60% of that cash that is coming from covered calls, I will start putting in calls if I see that the bounce is holding up. And for
right.
some reason, if we see another dip from here, okay, then more covered calls and put all the money at possible. Like if we see again, like stocks 20, 30% down here, that point,
Yep.
any money that comes from covered calls will go straight away in just outside or at the money calls as much as possible.
And when this stock like Snow, those are really volatile and their beta is very high because it was 178 and like on Friday it closed around 163, 162. So it's like a $15 decline in a day or two. So that thing we need to always care of. And shrewd investor, they always do some call selling strategy when stock makes like 50% run.
Now makes sense. So I think the one thing which we both are currently doing is, okay, so just to put in context, is like that everybody is saying, and IMF has said that probably the economy, given its size, which is going to grow the fastest this time, at least in this year and next few years, in the Indian market. And being Indian, I mean, we know things about markets are on the ground that
Right.
sometimes it's very difficult for people to see from outside. India is not a simple market, and India is not a simple country
Yeah,
to
it's the
understand.
hardest market.
It's real. So let us do this part. Okay. So first thing, uh, what is going on in Indian market according to you? Let's keep the Adani for the last one. Okay, let's
Right.
just take the Indian markets in general. Okay,
Right.
uh, that I mean, are they going to bounce back? Because we have seen this 60,000 Sensex and this 18,000 Nifty story. It's neither going down nor it's crossing. What's going on? What's happening in the Indian markets right now?
So basically, what happened, Sachin, in 2022, we all saw the decline of China. Basically, the index fell down a lot, like more than 50% plus from 2018 highs. It went down to almost 15,000 on Hang Seng. Then, even in Europe, UK, Germany, entire Eurozone, they also declined a lot. Then US market was already in decline and they also declined 20%, 22% S&P 500. Then money has to go somewhere. And India's growth story was there. And earning was also super special in India. Like even SBI said like 70% jump in their profits. So that is something really big and good thing. So that's why they put money into Indian markets. But in Indian market, there is like crazy FOMO. If something started going up, they just buy, buy, buy. And like even ICICI Bank, it's a very big bank. It was around 650 or something rupees, but it went up to like 900, 800, 956 rupees, I guess. So they bought
Makes
it.
sense.
Even like Bank Nifty at the September, it was 37,500, 37,500, and at the like December it went up to 44,000. So that's a very big run up. And even in Nifty went up for 18,800, 900. And after October end, what happened? Chinese market started recovering, uh, and it almost recovered like 50, 55% by now. And in the late December, Indian market was already heated up, so they started booking a little bit profits, and you saw the decline. And in last 2 weeks, it's all over Adani because Adani is connected to like entire Indian ecosystem, basically banks and a lot of investment in different groups, and that's why they. But still, Nifty is holding around 17,500, 600. It almost became 850, 17,850 as of closing.
No, makes sense. So tell me one thing. So I think like I want people to understand few things about the Indian markets. Okay, just in general. I think people don't know like when you talk about Indian indices, India has like very broad diversified set of indices that you say that you want to run this strategy, there is an index for that.
Yeah, yes.
Okay, the ETFs in Indian markets are not that efficient. Okay, so
Yeah.
I have seen a lot
Liquidity
of time.
wise.
Yeah, liquidity wise, and it's better to. I mean, like the funds are better. This is in my opinion that it's easier to go via fund than via ETFs in Indian markets. Okay, Indian markets ETF in the US are okay. They are not. I mean, it's the composition of them is pretty. I mean, it's pretty diluted. You cannot play specific strategies. Okay,
Right.
it's a very broad ETF, but yeah, I mean, if you are looking for the market in general, Indian market has something which is called auspicious days. That means there are days where people prefer buying. These are
Yeah.
religious days at times. Like feel you surprised. Like I have seen Indian market up on the first day of every year. I don't know for how long. Okay, it's so there are like few days in India which where people are people prefer buying. I mean, it always happens like that. Okay, the
Right.
another thing is which is very important is like a lot of retail players in India, they don't do day trading. I mean, because a lot of people buy today and they sell it after 2 3 days or buy to. I mean, like there are people who do day trading, but day trading from with retail also because of how the system is and how the tools are, it's not that straightforward for a
Right.
lot of people. And a lot of people don't actually do that also. The taxes have also changed over the time. Okay. Uh, the now let us come. So my view on the market in general is okay. my understanding is that given the elections are coming next year, I think when it comes to throw the bottom in Indian market overall in broad, I think government will be very supportive overall, and they
Right,
have pumped money in this particular time. I mean, I'm super impressed the infrastructure efforts that has been taken place and more money into going into infrastructure. I was very surprised to see the railway improvement in general. And I was
right,
talking to one of my friend who is a very senior officer, and he's telling me that like earlier what used to happen, like a lot of these cargo trains, they used to come to the city and they used to congest the city network. Now a lot of
right,
cargo trains actually don't even enter in the cities.
right.
That's how they have. So infrastructure wise, there has been. I mean, we still have a long way to go, but I'm seeing that there is a lot of groundwork that is happening. It's not like the money was initially being. I mean, in spent for years. Okay, but this time I think I'm really seeing the ground up impact. So my view on the
They
market is.
also pour down some 2.4 lakh crores for railways this year in
Oh
budget,
yeah, yeah. Yes.
and they put down 20 lakh crore for agriculture, and again, I think 10 lakh crores for infrastructure.
Yeah. So that's what I said. The money this
And
time that
that
is
was the
coming.
focus since last 3 to 4 years. Like infrastructure should be good in India, and they're actually doing something about it. And you can check the cities when you go from 2 3 years living in US,
It's
and
a huge
after two three
difference.
years, yeah, it's I mean Pune almost feel different when I go.
I'll tell you something. Like I started working in 2004, and those days, my first job was in Vadodara, and Vadodara and Ahmedabad used to, in between, they used to have this kind of like an expressway, and
Right.
I was like, I haven't seen those kind of roads in India by that time. I mean, of course, they existed because I mean, came from a small town, but now when I go, I mean, they are everywhere.
Yes.
So it's so the my point in Indian market is following is that whichever way we look and whichever whatever the bottom came, okay, overall the growth is going to be pretty good for next
Yeah.
5, 10, 15 years. And I have a specific view that bec- I mean like when this growth is going to happen, so for example, if we say that Nifty is going from 18,000 to 60,000 in next 10, 15 years. So my point is if Nifty goes from 18 to 60,000, the small cap Nifty is going to go 10x to 15x.
Right.
Okay. Actually, small cap quality is not that bad in India, especially at this particular time. So since like after the COVID, I have been long, especially in small cap and mostly small cap, some mid cap. Then this year I rotated everything in a small cap.
Right.
Okay, now what I'm thinking is that instead of going from the small cap funds, I'm trying to find out like 5, 6 players. I mean, I want to be very concentrated and just select those 5, 6 players and just leave that money there for like the next 7, 8 years.
Right.
Okay,
And
so
Sachin, uh, whenever Nifty bottoms this year, or if it made significant bottom around, let's say 15,500 or 16,000, I will be aggressively buying that because when Indian market bottoms, it rises very fast because everybody knows they have GDP projection of 7% this year for India, and it's very large in terms of largest economies around the world. Means like US is projecting they might grow 1.5 to 1.8% this year, but in terms of that, India is growing 7%, and nominally it's even higher. So uh, I think it will be really good opportunity to invest in India, and I also see myself within 3 to 5 years, Nifty can go to almost 21,500 to 24,000 max. That's my view. Because if we continuously grow like 7, 6, above 6% in GDP for continuously for next 3 to 5 years, it makes sense like to Indian market to grow. And
no, I agree.
everybody is interested in India. Even manufacturing is shifting there. Apple shifted there. A lot of new manufacturing of iPhones and iPads in India, and even few semiconductor companies. Even Tata started working on some semiconductor fabs. So that development is also going on.
That makes sense. So now let's come to the Adani factor. Okay. And let me just remind everyone like long before Hindenburg report came, I think it's been months since you have been bearish about Adani. Like you said that, okay. So I want to just split it into two parts, okay. First part is Adani companies being overvalued.
Right,
Second part, which Hindenburg is saying Adani's companies being fraud.
right.
Okay, and I have a very clear view on both parts. Okay, and let me start it from here before I catch you that uh, in Asian context, first related party transaction is not considered bad as in US and Europe because of the natures
Right,
of conglomerate. That is first part.
right.
Okay, I mean, like if you go, I mean, like, and second part is no economy has been built without having certain companies certain advantages. Even you go back to all the US economies and you go back and you will see that okay, Rockefellers and JP Morgan they had certain
Advantages.
advantages. Okay,
Yeah,
when you go to Chinese and you go to any country you like, okay, the countries rise and there are certain companies rise. Like in the first phase, Reliance was that company which was getting okay.
lot of advantages.
Okay, now you wanna call it nepotism, favoritism, or whatever you wanna call it. Every country has it. I mean, if you go today in US, big tech has the same thing.
Right.
Okay, so first thing I wanna put in is when I see the context of Adani. Okay, uh, is it over leveraged? I think everybody in the market knew it is over leveraged.
Yeah, it's 20,
People
12x,
were
so net debt to EBITDA,
Yeah,
so it's
people were throwing
overleveraged.
money about Adani because first thing is there was like three underlying assumptions. The first assumption was that Adani will get these large infrastructure projects, which it is
Right,
getting, okay. And in order to deliver, and I have been in large mega capital projects for years. Okay, you go into a project financing, and most of the time the projects are done as a separate entity. Okay,
right.
and then generally what happens is that it's all about the project delivery and execution. Second part is that Adani has the innovate. He has the cheapest solar.
Right.
Okay. Now, it is very contextual because now, if you say that if you have the cheapest solar, and that means derivative industry, which at least some people want to believe, for example, in hydrogen, I mean,
Hydrogen.
it
Yeah,
becomes quite critical. Okay. I mean, at this point, cheapest solar is an advantage that's quite strategic. The third part is that there is a I mean a open discussion around it. Okay, that and in media and the politics, it was like a very open attacks against Adani because of his closeness with Modi and all that. I mean, tomorrow if there is a Congress government, then there will be a similar attack from other people. They will say the Adani is close to Congress. So those, like I said, we like it, we don't like it, but I mean, companies have strategic relationships with
and that
countries, and
story
every
has
country
been
has it.
same for the like decades
Yeah.
with
So
different industrialists.
yeah. So is corporate governance an issue? I would say. I mean, yes. I mean, corporate governance an issue, but would that have stopped a lot of companies? So when I say that, so I will see that, like I said, it's over leveraged. Okay.
Right.
I would see issues in terms of corporate governance, but like the way it has been described as a fraud, okay, I would I would not go there. That's my opinion.
Yeah. Even I won't go there with like accounting fraud or something that claimed. Means overvalue is a one thing a lot of people do their fundamental analysis. Means if you see like Adani Total Gas is running for 150 price to sales, and it's in gas industry where price to sales are less than one, then yeah, everybody is like come to that point like it's overvalued or something fake is going on. The same thing with Adani Green. It's also an energy company, and it's running for like more than 100 price to sell. So that doesn't make sense. And it's a net debt by EBITDA was like 12x for Adani Green because they took a lot of loans to develop. And in solar energy sector, you need to take a lot of loans, but not as that much as leverage they took. Uh, in Adani Enterprises, also it was 100 rupees stock, then it became 4,000 plus. Means, yeah, we get it. Like growth is also really good, but not like it should have gone like 40x. And in terms of they like Mauritius and Cayman Islands and these account pumped it, and well, basically those were funds or mutual fund, but the funds doesn't allocate their entire money or more than 95% of the money in same group or companies, and we have seen this in everywhere around the world. Like no,
Yeah.
even RKK doesn't apply more than 10% in one stock, and they're I'd consider they are not crazy, but this is like more than crazy, like 95, 98%. So that was the issue. And even if you see in March 2020, basically when there was a fall, Gautam Adani's net worth was like $5 billion and it went up to like $150 billion recently. So that is like 30x returns or like increase from that
Yeah.
bottom. But when you check with the group, it doesn't show you that kind of numbers. Like, I I mean, even with premium, if your revenue grew up by like 10x or 15x, then it makes sense that it should have been like 30x on your net worth. But basically, their Adani Ports, which is a really good business and legacy business of the group, which is still doing good, and they are making a lot of deals and acquiring a lot of ports. So I never had problem with Adani Ports. I always loved that stock, and I invested in that stock. But this Adani Total Gas, it got some stakes from Total, which is French oil and gas integrated company. They actually bought like first 20%, then 50% stakes, I guess. And that stock was like 80 rupees back in March 2020. Then it became like 4,000 plus. And if you check the revenue, it didn't grow like that much, like 10x revenue. So that stock could have been like more than 50x. So that was the issues. And Hindenburg, which they did do really good analysis. So uh, I would agree few points out there, like valuation and leverage compared with the industry averages. But yeah, I mean fraud part and that I don't think it's a fraud.
So, my criticism for Adani will be that they run a public company like a family company. That's my criticism for them. That means that
Yeah,
I mean, from outside, it looks like they're running more a hustle at times, the way they run the things. That's why the issue of the corporate governance, because sometimes, like for example, if a company is so heavily leveraged, which is okay, I mean, for an infrastructure company, okay, but then and the reason why infrastructure companies so leveraged, because you will return the money at an interest rate. So if your overall returns are good and above your back, basically you if you higher the leverage, higher are your earnings are going to be in that
right,
respect. So that's okay. But if you are going to have be a highly leveraged company, you need to have more responsibility towards investor in terms of clarity. Okay, I mean,
right,
so that, and one thing which actually bothered me recently about this Hindenburg report is the timing of it. See,
right,
because I was thinking, like, if I have to short it, and if I'm claiming it to be a fraud, I would actually wait for FPO to go because I want more float.
right,
Okay, so the way I see it is that because it came just before FPO, that means it was clear that this report will have a detrimental effect on FPO. That means at least, and if Adani is not raising capital, there is a material benefit for someone somewhere.
right,
If Adani releases the FPO, there is more float, and then you short it, the material benefit is for you only. So the way the
right.
Hindenburg report came out, um it actually given material benefit to someone somewhere, and who that someone somewhere is, I have no idea. But that this is why I'm a strong opinion that there are at least more parties behind Hindenburg report, and
There is
I
always more
I have
parties
seen
behind
their previous
Hindenburg.
reports, and the kind of effort they have pulled up here. It looks very difficult that they have done entirely by internal resources they have. So there is
Yeah,
someone somewhere who probably collaborated in some capacity. Okay, probably
and
will know in some
this
time.
happened in equity market, but in bond market there are a lot of different things happens, and I think in bond market especially the big shorters or basically billionaire people, they must have shorted these in bond market because it's bigger than that and damage can be done more in bond market. And the way these stock equities have fallen from Adani Group, that IPO is not even come close because it was just 20,000 crore and maybe $2.5 billion. But here, the entire group value went down almost $85 billion. So the damage is big. But yeah, means like Adani Total Gas or Enterprises or Transmission and Green, these shares shouldn't have been gone up that much because like 800 P for a gas company, you know that it doesn't make sense.
It
It's
doesn't. I
like
mean, like,
ExxonMobil buying at $12,000 per share. It's kind of that crazy.
and like I
But
was
that
saying,
doesn't it affects a lot of banks and from where they must have took the loans. So that bank nifty might be weak for a while, but it does not much affect the India's growth story, I would say. And declining in different stock due to this saga would be a buying opportunity. And last session, I saw Adani Ports, which is legacy business, trading at 396 or 400 rupees per share when their P went down to 15 or 16. So I just made a call to buy that stock and it went up like 20% in a day. Means Adani Enterprises went up 67%, but I was never interested in that company, so I didn't buy it. But I went up with Adani Ports because I know that business since long time and I have done my research on that company, so it was a great buy. And if it again comes down, I will again buy it.
that makes sense. Tell me one thing, Himanshu. Are you following EU markets as well?
Yeah, I'm following and I'm not even understanding why it became so overcrowded now because UK market almost at all-time highs from what I bottom they made like around 6,700 or something on FTSE. Even in Eurozone, it went up to 4,200, and from just within a quarter, they bounced back so hard. And I honestly don't know the reasons. Means I saw earnings from ASML, which is the biggest company from Europe, and I think they sandbagged the numbers and beat it very hard. So it ran almost 100%, and its weightage is like really good in a lot of ETFs or their even Euro stocks 50. So I think that's why it bounced very hard. Even SAP was 79, now it became 110 plus. Uh, and a lot of healthcare company which is in FTSE 100, like AstraZeneca and all these. So anyway, in US and Europe, the pharma companies went up very high because little bit safer place than risky assets. But honestly, I don't have any idea why they went up this much within just a quarter. I'm still finding the reason. And I also went short on UK.
This is my broad thesis. My broad thesis is that if you ask me like my macro trade for longer terms, my macro trade for longer term is long US, long
India.
Asian Pacific countries outside Australia, and short Europe.
Yeah.
Because the issues they are having is, and let me just put it very clearly, like why I think like this. So for example, say, let me take the EU first, and we saw that EU has submitted a plan how to
Right.
move away from Russian gas, which is
Right.
fine. Okay, plan is okay. The question is, if you are going to execute that plan, that means you need to execute a lot of very large projects.
Right.
You can print money, but how will you print engineers? how will you print supply chains to actually getting done? And when was the last time Europe has completed a mega capital project on budget, in time, and for the capacity? Never. Okay, so these points are not discussed. So, when somebody doesn't discuss these points, it tell me that whatever they are saying is they are not serious about it.
Right.
Okay, because if you have not delivered that kind of excellence and you are telling me that you will deliver 5 time excellence of that on 200 projects and without having your people and supply chain, yeah, I think I don't know what you are smoking then. So that's my worry with the EU engine. Another thing is like I don't know, people might forget it now, that Boris Johnson, when he was there, he was trying to make some changes, especially the changes that affect a lot of fintechs. The Europe has a lot of fintechs. And their valuation has gone up and down like anything in last
Right.
1 or 2 years. But these fintechs, a lot of time what happens that they end up getting listed in US.
Right.
And a lot of them have shown desire that they want to come to UK or Europe, but certain regulators and certain regulations around it has to change. They have lobbied for it, but it hasn't happened. Okay, so to me, like at least in near term, my enthusiasm about UK and EU is less than the US and the Asian markets. That's how I see
Yeah.
it.
In entire Europe, I only consider Switzerland and Germany, which I think investable place. But apart from that, I'm not interested in any other.
No, it makes sense, man. Germany, I'm also getting a bit bearish, especially because of their how they have handled their energy crisis. So it's a
Yes.
manufacturing based economy, and if you do not have access, so manufacturing economy needs cheap labor, which it doesn't have. It needs cheap
Right.
energy, which it doesn't have. It needs efficiency. Okay. Now, when you are seeing like how Chinese companies are, see, if you have to buy a petrol car, you will very rarely buy a Chinese car over a German and Japanese car.
Right.
Okay, but if you are going to buy an EV, okay, a lot of people in Europe will consider Chinese EV. Okay, and this is what people forget about it. When people talk about it like this, they say it's about climate. It's not about climate. See, if you think about like from an Indian and Chinese point of view, you want your economies to go bigger, you want your countries to become better superpowers. You cannot do it until and unless you have a domestic energy assurance.
Right.
Okay, and they both countries, they know that they cannot get the domestic energy assurance based on oil and gas. They
Right.
also don't want to be in a situation that whether these leaders wake up in the morning and they realize some tweets have been shared between Europe and Middle East and the oil price is going up or going down. They say, why we are mere spectators? So their policy is very simple, is and you cannot change the global order unless you change the game.
Right.
Okay, so it's not like this that China is more conscious about EV. No, it's not like that, because for them the EV is simplified. It's a simple version. It's a tool that changes the dominance of automotive industry.
Right.
And that's why people say, oh yeah, like they are burning coal, they are going for nuclear. The idea is very simple. We need energy. Is it
Right.
renewables? Is it nuclear? Is it coal? Is it oil and gas? We take it all. And this is the same. And this is what I think. This is what people are missing in Europe and US, is that their policy is very simple. We want cheap energy. We also understand that this cheap energy cannot come from oil and gas, so we have to move away from oil and gas.
Right.
They are actually more serious about moving from oil and gas than what I see in Europe and US, because they know it's just not possible for them to sustain
Right.
oil and gas in this amount for that long. So their
Netherlands is
drive to
doing
move
good
towards,
progress in that.
yeah, so their drive to move away from it, that's what I say, it has nothing to do with climate. It has to do with more the aspiration and their view on changing the order about it.
Right.
So let's see, man. That's what I'm more. positive about renewable adoption in Asia than anywhere else.
Right.
So when
Also,
this,
Sachin, the one thing I'm not getting, like in Europe, a lot of countries have negative interest rates. In UK also had around zero. And this now it has 4% FFR or interest rate, you can say, and they're still at all-time highs. Does it make sense?
yeah, no, I agree. I mean, I totally agree on that part, man. When I got a message from Joseph, because I actually wanted to start another channel which has nothing to do with investing. And he's saying that he saw one of my mid-career transition video and helped. And I'm really happy if my video has helped you, man. Okay, I changed several career. So that's what I thought. Like what traditionally we hear about changing career and what we actually do is very different. That's the reason I got motivated to make those videos.
Right.
Thanks, man. Thanks for sharing. Really appreciate. So, Himanshu, I mean, when is your MBA finishing now?
In May 23.
So, what's your plan after that? Investment banking?
Yeah, probably I will still be interested in supply chain, solving some bottlenecks. But if I get a chance in corporate finance or investment banking, I might take one.
I mean, no worries, man. Once you join, you let me know. I really appreciate for your time today. Okay, I
Yep,
know we have
me
been
too.
discussing about it, and hopefully we capture more discussions during this year. And let's see
Yep,
how this rally plays out. We have
right.
mixed feeling about it. I mean, we are very happy the way it has played, but I'm
Yeah,
very keeping a very close watch around it, especially because I want to see that do we really see the signs of a proper reversal, or
right.
are we going back to the trenches you were in the last year? So let's see how it works out. Really appreciate for your time, man.
Yes, thanks, Sachin.
Thank you, man. Hope to see you soon again. Okay. Let me end the
Yep,
broadcast here.
yeah.